When we look at our energy use, we can break it down to not just as a global perspective, but also in comparison with other countries. This is something that we've seen repeatedly in news articles where Bitcoin mining is compared with relatively small countries and small levels of energy usage and consumption. But what we see here when we look at the chart, comparing it to the primary energy consumers of the world, really, countries like China and the United States are the largest producers and consumers of energy. And really, the chart goes in an exponential scale downwards. As we continue moving down this chart, these numbers would drop off considerably further until we finally hit that 275 global Bitcoin mining. The reality here is that this is just an inconsequential amount of energy usage. Next slide. In addition to being an inconsequential amount of energy usage, we're also using a high amount of sustainable energy. Here we have a chart that shows both the Bitcoin Mining Council member data as well as the extrapolations for the entire global Bitcoin mining industry as a whole. And they stand at 63.8% for the Bitcoin Mining Council members and 58.8% for the entire industry here. When we compare that across these different countries from Germany, EU, South Korea, we can see that Bitcoin mining is really outpacing most of these countries in terms of their sustainable energy mix and utilizing these sustainable power resources. And the reason for that is because Bitcoin mining is very location agnostic and is very flexible load. It's also highly incentivized to seek out the most overlooked and underutilized sources of electricity and energy in order to remove and reduce cost. So we are incentivized as industry players to go after these remote energy sources and these sustainable energy sources that simply can't power a lot of the energy consumption that takes place in a place like Germany or South Korea in large metropolitan areas. Next slide. Here we're consuming or comparing global Bitcoin mining versus other industries around the world. And again, what we see here is that Bitcoin mining is really an inconsequential target. The reality is that Bitcoin mining emissions or consumption of energy is primarily closest to things like computer games and holiday lights. These are two things that you really don't hear people talking about as overwhelming threats to the planet, as things that are areas of concern, yet their energy consumption is very similar. 275 to 214 terawatt hours between Bitcoin mining and computer games. Again, reminding people that if we are going to be going after, industries, this is a very inconsequential one. If you have a 1% improvement in energy efficiency amongst this residential buildings category, it will more than offset the entire energy consumption for the entire global Bitcoin mining industry as a whole. And so residential buildings are going to be a much more impactful target, followed by road vehicles, non-residential building, and other forms of travel. Next slide. When we're looking at the quarterly data, the mining efficiency has continued to increase with the deployment of new gen miners and high efficiency miners that started trickling out in Q3 and really started hitting kind of full deployment in Q4. So what we've seen here is that the entire industry's electricity consumption is estimated to go up about 3% to about 11 gigawatts continuously, while the hash rate has grown a full 6% quarter over quarter from 231 to 245. This hash rate increase is due to both increases in energy consumption, about 3%, but also that 3% improvement in mining efficiencies that we've seen from the new gen miners like the Bitmain XPs, the Hydro miners from both Bitmain and MicroBT, the MicroBT M50S, as well as the new Intel miners that are starting to hit different players in the industry. So we've also seen a rather flat line there across the sustainable electricity quarter over quarter, where the sustainable electricity mix across the entire industry has stayed relatively consistent there in the high 50s percentage points, quarter over quarter for the last 7 quarters. And the Bitcoin Mining Council is outpacing the rest of that industry, again, by a few percentage points, leading to their higher efficiency machines. Next slide. Year over year, we're seeing other similar trends that we expect to continue. The mining efficiency has increased 16% year over year, primarily due to those new miners hitting the market, while the hash rate's up 45%. Another way to think about the hash rate really is the global security that it provides the Bitcoin network. Generally speaking, the larger the hash rate and the more decentralized the hash rate, the more secure Bitcoin is over time. So seeing this number continuously trend up, despite the macro headwinds that we've had over the past 6 months, is a very positive indicator that the industry is continuing to plow forward, invest in new plant, property, and equipment, and continue to secure the network in anticipation of stronger market conditions in the future. We now represent almost half of this global hash rate, which is a big increase that we've seen since we started this survey back in 2021. And the sustainable electricity mix there has basically, like I said, is more or less stable there, but has moved up marginally year over year from about 58.5% to 58.9% sustainable electricity. Next. This efficiency improvement really has all to do with this page here with regards to the mining hardware. And what we've seen here is really the evolution of mining hardware over the last 12, 13 years, really starting with the basic CPUs, GPUs, and dramatically increasing starting in the teens around 2013 or so, the introduction of ASIC machines that dramatically improved the efficiency of this equipment. Even on a year-by-year basis, we're still seeing dramatic improvements in efficiency, where last year, the best units that you could buy in terms of energy efficiency were S19 Pros or J Pros at about 29.5 joules per terahash, which is now 21.5 joules per terahash at the end of 2022. This is showing that even on a 12-month basis, we can have, roughly a 30% improvement in efficiency between the best miner at the time to the next best miner at the time, a dramatic improvement in energy efficiency. And this is what's driving the industry forward in order to reduce our energy consumption while providing higher and higher levels of security. This joule per terahash efficiency over time has gone up about 5,800% from the beginning of the ASICs about 8 years ago. So right now we're assuming that the global joules per terahash efficiency is about 46 watt per terahash, which puts it just below the newest gen miners here at 21.5 joules per terahash, and puts it right about in line with an S17 or an M30S or an M31S in terms of energy efficiency, recognizing that not everybody is running these newest generation XPs, and these are still continuing to hit the markets. Next slide. In conclusion here, really the Bitcoin mining energy efficiency is improving just tremendously fast. We're estimating as a council somewhere between a 3 and 2 times improvement in mining efficiency over the next couple of years. And following that, about a 6-fold improvement over the following 4 years after that. When you combine that with the fact that there is a halving built into the Satoshi protocol that reduces the energy consumption and reduces the incentive to consume electricity basically in half every 4 years, really the guaranteed or the combination of dramatically improvements in hardware as well as the reduction in energy through the economic incentive of the halving means that Bitcoin mining is guaranteed to be dramatically more energy efficient in the next 8 years and basically every year rolling forward. This is not a trend that is ever expected to change.